Hey, good morning, everybody. Welcome to the Ankerstar Wealth Morning Show. Casual Friday for me, and as you can see, I'm on the road, but Mike's on the home court holding things down for the day. We have three exciting topics for you today as the market, you know what, keeps going up, up, up. Not going to last forever, but we like it certainly when it's going on. And closing out the first half today, last trading day for the first half. So topics today: beneficiaries. Maybe not the most exciting thing, but if you mess that up, the money's going. And I'm going to talk to a little bit about the different options you have there, as well as share kind of a funny story with you. Funny, I guess, goes into quotes, depending on which side of the fence you're on of that story. Then Mike's going to talk about the most important number of the day, the inflation number this morning. Every time these numbers come in for inflation, all of us in the investing business kind of hold our breath for a little bit till the number comes out, and then everything can go back to normal after that. And then lastly, it may surprise you, Mike's going to talk about two different groups of people out there, Gen X and Boomers, and compare their 401k balances. And I think you'll find the results interesting. But before we begin, this is a financial education presentation. You have to do your own due diligence for acting upon anything you hear in this presentation. More disclaimer information is available at ankerstarwealth.com, and the opinions expressed are Mike and mine alone. Okay, beneficiaries, before I even throw up a slide. So every account you have has either a beneficiary if it's an IRA, or if you have a joint account or an individual taxable account, it may not have anything attached to that unless you actually put one on there. So let's talk about kind of the hierarchy of how things work. So when you pass away, if you have things with a designated beneficiary on it, the money can move. As soon as, so realistically what happens, a few days have to go by, of course, while everybody deals with the change in the situation, if you will. Then the financial institutions like us and Schwab and any Fidelity, whoever you're out there, will need the death certificate. So again, that's produced, and a few days later, once we get the death certificate, the account is frozen once Schwab gets, or the custodian gets word of the person passing away, because you've lost your legal authority to trade that account now because the contract is with the person that just passed away. So things freeze. Then we get the death certificate, and then if it's a beneficiary on account like an IRA, where it's like maybe it's a spousal thing, so the husband's IRA becomes the spouse's IRA, the money simply moves. And that can take like 2 weeks, right? I mean, it can happen fairly quickly in the big picture of things. If there's not a beneficiary, say it's a taxable account, and again, your options are, if you ever heard of TOD, transfer on death, there's some other names out there, but it's the same thing. You can go, okay, if I pass away, I want this money to go to a beneficiary directly. And if that has a beneficiary, that money can move to before you get in. So beneficiaries move first, and then you crack open the will. And then the executor opens the will and says the distribution of assets. If the will says something different about what you've had set up from the beneficiary overrides the will. So you need to make sure these beneficiaries are set up correctly. The will basically, everything else goes into probate, and that's what the will addresses, is the probate assets, if you will. Bank accounts can sometimes not have a beneficiary on them. Property, estate, sometimes, those sorts of things can go in there. And if you go into the probate process, you're looking at months, right? So it's kind of important, if you want the money to move quickly, to have a beneficiary set up. And then, of course, another option is setting up a trust. There's a million types of trusts. Not going to go into whether you should or shouldn't have one, but if you do have one, and assets are in the trust, then the beneficiaries are designated in the trust document. So make sure you know what that says, especially if you haven't looked at it in a while. So, we set up, thinking about how life happens, right? It's like, well, you set up an account, you set a beneficiary, and if you set up a trust, you make sure on that day you've got it fully flushed out. And if you have your will out there, which you should, it says certain things too. But as you go through life, those circumstances can change. Not just your own, but a child may get married and divorced, or a child may get married and then subsequently pass away. So you can get into these weird chains that if somebody predeceases you and you don't have their spouse even mentioned in the will, you might have grandkids that subsequently get disinherited through a weird chain of events, right? So these things do need to be addressed. It's nobody's fun thing to do is, sit down and look at all this stuff. Nobody likes talking to lawyers that are going to bill you every 6 minutes, for what they do. But it's important you kind of get all these things straight as the circumstances change. Or you too could be in a funny article. Again, funny is all in relation to where you stand here. So this was from wealthmanagement.com. I'm not going to go into the specifics, but the title is good enough to kind of paint the picture of ex-girlfriend may get windfall due to beneficiary designation snafu. So again, if you set a beneficiary and then you subsequently your circumstances change, it's going to the beneficiary. And no, it's not going to court and it's not getting challenged. It goes and it's gone, right? So make sure you know what you have in your accounts. Obviously, if you have any question on things you have set up, you can either check it yourself or reach out to your advisor. We'd be happy to check it for you. We do have it part of our compliance calendar to check on it once a year. So that kind of catches those sorts of things. But certainly if you have a circumstance that changes, you might want to take a look at things. All right, that's enough on beneficiaries. Mike, over to you. Let's talk about inflation.
Yes, and before I get started, I wish the best to all of my ex-girlfriends of the past, and I hope they are disorganized and left me on there and that they're doing great. So anyways, yes, tough topic, but we'll get into some good news here. So we're seeing some green numbers up. Dow Jones, S&P up 0.59%, NASDAQ up 0.76. So that is good news for inflation. And it's always is good news, bad news, good news, whatever. It is good news that the PCE number, personal consumption expenditures, only is up 2.6% from last year. So that is good news. And then the stock market sees that as good news as well, because that allows the Fed to later this year, maybe, hopefully once, twice, who knows, next year, reduce the overall discount rate. And that's what the market's looking at. And within that, the one thing that they did say is that consumer spending, which is the major driver of our economy, increased 0.2%, which is a little bit weaker than forecast of 0.3%. It's only 0.1%. But if that probably had hit, the market really would have skyrocketed. But we'll take green, and it's been a great year. We're seeing inflation come down. I think there was one other key point on this article. Or you can just see the graph, and this is inflation. And I know I hit this with Corey the other day. As inflation goes down, it's still inflation. There's still inflation. Prices are still going up, but they're going up at a slower rate. And is it ever going to go back to the prices of 2021 in this chart? No, we're not going to go back to those prices, but hopefully the prices stop increasing. That is the goal. So with that, the other article that I found very interesting, and for Gen X, finally tops baby boomers in 401k balances. So what does that mean? How can that be? Well, baby boomers are retiring. They're also probably having less aggressive investing, and they're starting to draw out money out of their 401ks. I don't know how they capture all the 401ks, even Gen X has probably changed jobs more often than baby boomers, but it's a threshold where they had an average of $543,400, which was $200 more. So it just barely peaked it, but Gen X passed the baby boomers. And, this is a natural cycle. This is not a bad thing. And they just said, what's driving the trend? Boomers are retiring. We know that every day, I want to say it's like 10,000 a day. It's a big number are retiring and drawing that down. So, hey, I did like the good news to see that 543,000. I wish everybody had that much saved in their 401k. I'm not sure that looks like a pretty biased audience, because I'd say that's pretty good. I'm real happy when I talk to someone and they have that much saved, because I have good news to communicate. Yes, you're going to be able to retire. You're going to have a great 401k two-legged stool with Social Security, as opposed to giving bad news that I don't know when you're going to retire. So anyways, Good news in the markets. The last couple of weeks, it's been very smooth to me. I mean, other than Nvidia peaked and came down a little bit, the market's been very calm this summer. So it'll be interesting to see what we have through the election season. I have not watched the debate yet to see what happened there, but I've read news. But expect some volatility as we go into an election, and then as the market, we get more certainty. Hopefully, the market screams higher at some point. So that's all I got, Steve.
All right. Hey, appreciate all that, Mike. And yeah, to conclude, we are wrapping up the first half of 2024. Market's been doing great. Big tech, which is, a lot of our focus, has been doing great as well. So really couldn't be happier. As a reminder, we do have our quarterly investment advisory board coming up on the least ideal date ever. I understand that, but we still have to have it. So it is what it is. But next July 3rd, that'll be out. Mike will be leading that, and we'll talk about the important part is talk about the mindset shift from the first half of 24 to the second half of 24. And of course, you just got a peek, behind the curtain as to what this election is going to look like from the debate last night. All I've really seen is the memes, which are kind of gold, but it's kind of scary that, that there's also, yes, we are going to elect one of these two people and go forward as a country. So potential volatility ahead. You'll hear more next week. But with that, you have a great weekend, and we will talk to you back Monday. See you.